investors like Khazana, EPF, mutual funds, as well as other retail investors and alternative lenders. SMEs can tap into these sources directly by raising funds in capital markets. They can also benefit from indirect access as this financing gets channeled to SME lenders, especially non-bank SME lenders. And this would allow them to improve their funding structure and enable them to compete more effectively in credit markets. And then this in turn can result in expansion of SME financing and improvements in the lending conditions that are offered to them. So a virtuous cycle can be unleashed in this way. Second, capital markets are the main source of equity financing for firms. As you will likely hear from, again, Anna, equity is a crucial source of finance for innovation. And many of the strategic documents that the government of Malaysia has issued, it's obvious that innovation is one of the key catalysts for faster, sustainable growth going forward. So financing innovation should take a center stage. And again, the capital market has a crucial role to play in this. Now, these days, you can't really finish a speech like this without saying something about climate. And that's not only because it's kind of obligated almost, but because it really matters. And it cannot be truer for MSMEs, especially in a country like Malaysia. We saw the devastation caused by floods, and typical story is that it's the vulnerable, either households or firms, the smaller ones that suffer the most. And those are the ones that do not have the capital to be prepared for inevitable damages that come. And the prediction is that these events are going to be more frequent and more severe in terms of the scale. So climate change brings at least several kinds of risks. One is the obvious physical risks. Flood happens, it washes away your asset, your factory is destroyed. That's a direct damage, but also it can disrupt the supply chain and infrastructure, the roads and so on that you rely on for your operation. So there's the direct and indirect physical damage, but it also creates the particular challenge of transition. As countries try to adjust to the new reality, the regulatory framework changes, the market demand changes, and smaller firms tend to struggle in adjusting to these changing requirements. So this is a transition risk. And to get ready for these risks and upgrade their operations, make their factories or shops more resilient, they need financing. And so this is, again, a critical element. And I understand that there will be a workshop in the afternoon in the program where the further details of these crucial question of risk, as well as opportunities that come with the changes that the economy is imposing on us, will be discussed in the afternoon. So once again, I would really like to congratulate the Securities Commission for issuing this important 5-year roadmap. And once again, I would like to reiterate appreciation for allowing us to be a part of the process, your trust and confidence in the World Bank as a technical advisor. It's a bit flattering to say it myself. And really the very great partnership that we have been able to deepen, especially in the last few years, at least during my tenure here. And I really wanted to stress my sincere appreciation. Of course, any roadmap, like all the other plans, is only worth its implementation. So I really look forward to rigorous implementation, operationalization, hopefully some quick wins, and also rigorous assessment of the effectiveness during the 5-year period. So thank you very much, and looking forward to a great discussion today.
Thank you, Dr. Yasuhiko. To deliver the keynote address, on behalf of the Minister of Finance too, I'd like to invite Yang Berbahagia Datuk Johan Mahmud Marikan, Secretary General of Treasury.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera, salam Malaysia Madani. Yang bahagia Datuk Sri Dr. Awang Adik Hussein, Chairman Securities Commission Malaysia, Dr. Yasuhiko Matsuda, World Bank Country Manager of Malaysia, Tan Sri Muni Majid. Ladies and gentlemen, very good morning. First and foremost, I would like to extend salam from Yang Berhormat Senator Datuk Sri Amir Hamzah Azizan, who unfortunately unable to make it this morning, and he sends his regrets. Obviously, I'd very much like to be here for today's very momentous and significant launch of today's 5-year roadmap. Thus, I have been entrusted to read Yang Berhormat's speech on his behalf. I was just joking with Datuk Sri on the way in that this gives me this opportunity to say whatever I want and have it attributed to the minister. I shall try not to abuse that trust and perhaps exercise that judiciously. With that, allow me to deliver a speech. It is said that the month of May derives its name from the Latin word maius, which is associated with the concept of growth, which I think is a key agenda for the country. In fact, the month of May thus far has been quite positive for the country, as you're fully aware. We've just announced our first quarter GDP growth at 4.2%, which exceeds the earlier advanced estimate of 3.9% and last quarters of 2.9%. That's a positive growth. In addition to that, last week we also announced, in terms of first quarter property transactions as well, was at 56 billion, which is about 34% up from last year. And just Monday, we also announced in terms of April's trade numbers, which is a growth of 12%. So all that puts a very positive start to 2024. And perhaps it's a reflection in terms of the positive momentum of economic management. But certainly that's not good enough, and the key commitment of the government is to undertake a reform agenda as articulated by Yang Berhormat Prime Minister in the Economy Madani framework. Actually, there's just less than a year ago that Yang Berhormat Perdana Menteri actually delivered his Economy Madani framework speech in this very same hall here in Securities Commission. And as you're fully aware, the Economy Madani framework, one, it's anchored or underpinned by values, and amongst them in terms of sustainability, innovation, prosperity, trust, elements which are very relevant to the agenda that we speak about today. And there are three parts to it really, in terms of one, a reform anchored on governance and public delivery, and then these two pillars of raising the ceiling and raising the floor. And certainly, I guess, advert from Ministry of Finance, certainly in terms of the reform of governance, that's something that the government's very committed to. In terms of fiscal reforms, the government has undertaken, for example, the Fiscal Responsibility Act, initial steps in terms of targeted subsidies, including electricity, and as Yang Berhormat Perdana Menteri recently announced, next step will be on targeting of diesel subsidies. And these are important steps to ensure that we are able to provide fiscal space to support this reform agenda as articulated in the Economy Madani. And today, in looking at micro, small, medium-sized enterprises, or MSMEs and MTCs, it's a unique area which both supports raising the ceiling and also raising the floor. Raising the ceiling in terms of one of the stated ambitions of Economy Madani framework is how do we build regional champions amongst our SMEs, and that includes restructuring of the economy. But at the same time, as part of raising the ceiling in terms of promoting greater prosperity and growth for the nation, it needs to then also be mirrored by raising the floor, ensuring that that prosperity for the nation is equitably shared and enjoyed by the rakyat and the people. And SME, as stated, being both the largest number of enterprises and also employers in the country, their success translates to success of the country and its people. Therefore, the release of Catalysing MSMEs and MTC access to capital market 5-year roadmap is particularly timely. The capital market can provide a suitable avenue for small and medium-sized companies seeking capital to transform their businesses or even for growth purposes. Financing and the ability to access capital could well turn out to be a key determinant whether a business opportunity or idea is seized upon or fades into obscurity. I think what is a key challenge for Putrajaya in the context of MSMEs and financing is akin to a relay race. As a company goes through its stages of growth from infancy to medium size and so on, how do we ensure that we have a regulatory framework and financial system that supports each stage of growth of the company? And as part of government's efforts, we then want to overlay that also in terms of what are the government institutions that we have to support them at different stages. As you're aware, we have different institutions, like at the early stage, we have entities like Cradle to seed the progress. Moving further on, government's even undertaking reform to consolidate some of our venture enterprises. For example, MAFCAP in Penjana under Khazanah. We then want, and further up the chain, we have our DFIs and financial institutions under government. And ultimately, we also have our government institutions. How do we ensure that both the ecosystem and also the government institutions supports the growth of our companies from early stage right through high growth, right up to maturity, through both ecosystem, financial markets, and also our institutions. And in this regard, the roadmap signals that the capital market stands ready to provide the much needed financing to facilitate the investments in industry and industry transformation that is required. Today, I think it was mentioned that we in Malaysia are very famous for launching roadmaps and plans, and we obviously need to back that up with implementation. And I'm pleased that to support today as part of filling up the gaps of this relay race. There are three announcements which I would like to make on behalf of Yang Berhormat Minister. The first is in the context of the lead market. Recognizing that we need to address and reduce the frictions and costs in MSMEs in accessing financing. One of two main challenges by MSMEs and MTCs in pursuing a public market listing is firstly the cost of fundraising, and secondly the lack of clear pathways to access the public market and subsequently transition to a higher tiered board. Therefore, I'm delighted that there are specific strategies and initiatives in the roadmap to specifically address this and revitalize the lead market as a potential platform for SME fundraising and as a feeder market to the listed board. Therefore, following SE's initiative to widening the class of eligible investors for the lead market this year, the Ministry of Finance has asked SE to specifically look at recalibrating the lead market further, particularly in terms of widening the pool of listing advisors to include professionals such as accounting and legal firms, and second, in terms of allowing alternative remuneration methods for advisors such as payment in terms of shares to also support and manage the cash flow and cost that's borne by the companies initially, obviously with effective safeguards to manage potential conflicts. These we hope will be ready by early next year. So that's a KPI for SE and Bursa. The second announcement regards to de-risking MSME and MTC investments. I think a key issue that we've always faced is in terms of the risk appetite in terms of financing MSME and MTCs. As the government's, as you're aware, the government on its effort for bank financing, we already have facilities such as under our SJPP, which provides guarantees up to 80% for bank loans provided by banks to SMEs. And we'd like to then look into a new space that also looks into the space of ECF and P2P. In this respect, there are new guarantee products by CGC that will enable to de-risk various debt-based and equity-based capital market instruments for investors, and with the hope that this would then further incentivize and encourage more lending and investment activities in this segment. CGC Malaysia recently launched an additional 30 million ringgit of portfolio guarantees for working capital under term loan with funding societies. I think we have all of the different P2P platforms outside, so this is one of them for financing up to 500,000 in early May 2024. This new tranche is additional to CGC's first portfolio guarantee program of 10 million introduced in April last year. So building on this momentum, happy to announce that CGC will further explore and discuss with more ECF and P2P financing platforms so that as a solution across the board, there will be guarantee solutions offered to ECF P2P, which will then further complement the guarantees that we already provide through the banking system. It is hoped that through more guarantee products such as this, and we hope that this will be implemented this year, will further bolster greater access to capital market financing. The third area announcements in terms of the SME capital market pipeline. The recently released Sustainable Responsible Investment Guide for Private Markets and Simplified ESG Disclosure Guide are part of efforts to enhance their readiness to access financing. As extension to the SEDG, Capital Markets Malaysia, an affiliate of the SC, will be issuing SEDG sector guides that feature enhanced disclosures for 5 significant sectors in Malaysia's economy, these being energy, transport and storage, construction and real estate, agriculture and manufacturing. This will provide necessary guidance on the additional environmental and social disclosures expected of these sectors. Last year, SC signed an MOU with SME Corp as part of building up that collaboration. In the spirit of collaboration, pleased to announce a new initiative, the launch of Elevate 2.0, a capital market incubation program led by Capital Markets Malaysia. This incubation program will be undertaken in collaboration with Martrade and SME Corp as key agencies overseeing the development of MTCs and MSMEs respectively. Elevate is a 4-month program that will provide high potential MSMEs with personalized mentorship and integrated counseling to enhance their capital market readiness for public listing and fundraising activities. And I think this is part of a recurring theme, that as we look at interventions for MSMEs, we do need to migrate from just purely trying to provide debt. So it needs this combination, as even articulated, we need pathways for capital markets, we need debt, we need equity instruments, and supported as well by also government grants where appropriate. I certainly look forward to more MSMEs and MTCs utilizing the capital market to meet their financing needs, as well as look forward to the success stories that we are bound to hear from. The roadmap also speaks of an inclusive and collaborative approach which aligns very closely to the Madani economy. And this is certainly a whole of nation effort, and we look forward to seeing how we can, as we talk about this, completing this relay race of ensuring all the different gaps. We will always hear the repeated story about how perhaps we may be good at perhaps the early stages, but not in the middle or later stages for high growth companies, and then there's a gap before it. We have the institutional funding right at the end. So these are things that we do need to continue to work together. How do we optimize on whether it's grants from the government, institutional funding, together with the ecosystem to ensure that we are able to provide the full complement, the full slew of financial instruments across the life cycle through this relay race. Wanted to give in terms of a good example of collaboration is MySIF, which one of the I think success stories by the Securities Commission, funded by the Ministry of Finance. And I must say, speaking on behalf of Ministry of Finance, it's money well spent, because I think when SC first approached us on this idea of supporting P2P and ECF, we basically gave the money to SC as a grant because we really didn't expect to see the money back. But I'm happy to hear that the over a couple $100 million that's been shared, SC still have managed to not, what do you call it? The principle is still intact. In fact, it continues to grow. But what's unique about this initiative is a new approach of collaboration. It's not just about, I guess, a traditional approach where you just give a RM1 grant and that's all it is, or 1 million loan and that's all. I think what this involves a crowding in of private capital. In general, most of the funding is done on a 1-to-4 basis. So RM1 of government funding is provided for every RM4 raised on these ECF or P2P campaigns. What also is perhaps unique of this form of collaboration is government normally likes to choose who it gives its money to, but I think many would say government is not very good at picking winners. And so for this particular collaboration, we're relying on the wisdom of the market, where the government fund comes in based on the campaigns that manage to raise this capital. And in addition, I see my fellow committee member of MySIF also in the crowd, and part of this is also designed to ensure that it gives that impetus for private capital to come in, and also gives the credibility that this is something that government supports. And happy to update that MySIF has co-invested a total of 930 million, as at the end of 2023, and this has attracted private investments worth 3.2 billion to co-invest alongside SMEs. And we continue to see how we can tweak the model. Initially, it was just given generally, then we tweaked it by giving a more generous funding ratio for priority sectors like food security, and for areas like social enterprises, we have government has forgone its returns. And these are different tweaks to see how we can better prioritize or incentivize more private capital in the spirit of blended financing. And I want to echo, I think, what was mentioned in the earlier speeches. Again, we can't just rely on just pure conventional debt financing if we are to support SMEs along its life cycle. We do need to explore hybrid approaches to financing. Yang Maha PM, even in its Economy Madani speech, spoke about Malaysia needing to also revitalize innovations in Islamic financing. We have in the past perhaps focused very much on creating Sharia-compliant mirrors to conventional financing. It's time to see what are new innovations that can go bottoms up to meet the new demands and challenges, whether it's climate financing, whether it's financing for new growth areas. And in this respect, I think this roadmap very much complements the other efforts that the government is undertaking to look at what it can do to further support MSME financing, whether, for example, the recent KL20, looking again to how do we then further support and grow the venture capital ecosystem. I see Dr. Amir Faisal here, so a very key part in terms of GLCs. We're rationalizing the venture entities within the government to reduce the overlaps, but again, trying to ensure that there is a division of responsibility at the different stages of the so-called relay race, and whether it's the earliest stages, like as I mentioned, Cradle or the MAFCAPs of the world, going on to the later stages of the GLICs. And even in that space, Yang Berhormat, Minister of Finance too, is working very closely to GLICs also to see how can there be better optimizing of some of the GLIC funds to also support domestic direct investments, particularly in high growth companies. So ladies and gentlemen, with a comprehensive set of cross-cutting strategies and underlying initiatives, we strongly believe the roadmap will be a catalyst to attract more MSME startups and MTC to access the capital market as part of meeting their financing needs for growth and emerging as regional champions as envisioned under Economy Madani. Speaking on behalf of government, we hope that the roadmap will spur the growth of more resilient and competitive corporate leaders of tomorrow. Like to call all stakeholders to work with government. I think government has expressed, whether in examples of MySafe or in terms of some of the initiatives on strengthening the ecosystem for growth capital, certainly this government is certainly very open to working with the private sector to help succeed the ambitions of Economy Madani. And thus, on that note, I would like to also take the opportunity to congratulate and commend the Securities Commission under the leadership of Datuk Sri Awang Adik for taking this initiative to develop this all-inclusive roadmap. We have of the few announcements, again, please remember the KPI to implement it immediately. My minister does follow up. Those who have worked with him would nod their heads. And with that, it is now my great pleasure to officiate the launch of the roadmap. Thank you.
Thank you, Dr. Johan. If I could request for you to remain on stage, and if I could invite Chairman to join KSP on stage, and Dr. Yasuhiko as well, and to come to the launch pad. So, Dr. Johan, this is what I need your help to please put your hand on the launch pad and press. Yes, thank you. And there we have it, the launch of the roadmap.
5, 4, 3, 2, 1.
present the first copy to KSP. Chairman, if you could do us the honor to present the first copy of the roadmap to Dr. Johan. And we have a copy each for Chairman and for Dr. Yasuhiko as well. Yes. Gentlemen, if I could ask you to come forward in front of the launch pad. Yes, for the photograph. Big smiles. KSP and Chairman, if I could ask you to come to the front of the riser. We want to take a photograph here, a few photographs, so there's an option. Thank you, Chairman. And again, so you have the real thing and the bigger cover. So the media are asking, follow the cue. Oh, they want action. Okay, open. This is how it is. I said variety of photographs. Gentlemen, if I could ask you to go to the center of the stage. We want to take another photograph with more people joining. If I could invite Dr. Kidin and Dr. Nazalina, as well as Anna and Tatiana to go on stage. A group photo of 5. All holding up copies. Okay, open the books and have a look at each other's books. Have a read. It's a 93-page document, ladies and gentlemen. 93 pages, lot to read. And it is already available on the SC website, and shortly we will give you a QR code. Right, members of the media, are we okay with photographs? Yes? Yes, thumbs up, they have told me. Thank you. If I could ask everyone to please go back to their seats for the next portion. Give us a few minutes to prepare the stage. Thank you. Thank you, team. So moving on very quickly, we are pleased to broadcast a short video presentation that captures the roadmap.
One of the main challenges that small companies face is a simple lack of access to financing. Because of this, what we categorize as MSMEs and mid-tier companies, or MTC, fall off along the way, not realizing their full potential to help drive our economy. Securities Commission's Catalysing MSME and MTC Access to the Capital Market 5-year Roadmap 2024 to 2028 is designed to boost MSME and MTC fundraising through capital market. It is aligned to key national agenda and the Madani economy framework. The purpose of this roadmap is to support MSME and MTC financing towards propelling economic growth and job creation, enhance the attractiveness of the capital market for MSME and MTC, and build a more inclusive capital market. The Malaysian MSME and MTC capital market offers a range of fundraising options in meeting the financing needs of MSME and MTC across diverse growth stages. To boost their access to capital market, the guiding principles and strategies of the roadmap will form the foundations and building blocks for the roadmap strategies and its underlying initiatives. Based on 5 guiding principles, the roadmap aims to improve their access to the capital market via 3 key approaches: regulatory and product innovation, market infrastructure, and capacity building. The roadmap's approach consists of 9 cross-cutting strategies and 36 initiatives to address key issues and gaps faced by the ecosystem covering investors, MSME and MTC, and market infrastructure. The roadmap is developed through rigorous engagements with both the public and the private sector. Engagements with ministries such as the Ministry of Finance, Ministry of Investment, Trade and Industry, Ministry of Economy, and Ministry of Entrepreneur and Cooperative Development will ensure greater coordination and streamlining of efforts by the government to assist MSME and MTC. Various feedbacks were also obtained directly from companies seeking financing to help identify key challenges and issues surrounding market-based financing options. Through a series of workshops and public engagements, this will foster greater connection between regulators and the public whilst ensuring the roadmap solutions address the needs of the companies on the ground. The roadmap aligns perfectly with one of the underlying objectives of the SC's Capital Market Master Plan 3, CMP3, which is to deepen market-based financing avenues for firms within these categories. After all, MSMEs and MTCs are our future. We need to nurture and support these promising and innovative companies as they will drive the transformation and become the backbone of Malaysia's economy.
This roadmap, as a result of much engagement with key stakeholders, is a clear action plan that is both practical and comprehensive. The SC is committed to listening to the public and the industry to find ways to assist MSMEs and MTCs to catalyze their access to the capital market. In line with the whole-of-nation approach, we look forward to working closely with all stakeholders, including ministries and agencies, capital market players, and key MSME and MTC touchpoints to ensure they can fully reap the benefits from greater access to the capital market. The roadmap represents a pivotal step towards greater alignment and synergies among key stakeholders in the ecosystem, as coordination and collaboration are essential for its successful implementation.
This roadmap belongs to everyone. Ministries, agencies, private sector all have a part to play to foster a vibrant and dynamic financing ecosystem for MSME and MTC. Let us join hands and be part of this journey.
There you have it. Ladies and gentlemen, we appreciate that Datuk Johan is here with us this morning, and I understand that Datuk Johan has to leave for your next meeting. Am I right, sir? So he will unfortunately have to exit. So everyone else, please remain. You all don't exit. So thank you, Chairman and Datuk Kidin. And to move on to the nuts and bolts of the roadmap, we have Datin Azalina to take us through. So let's move on very quickly. If you can, the clicker is there, Datin.
Assalamualaikum and good morning, everyone. My name is Azalina, and I'm going to take you through, trying to take you through in 10 minutes, a 93-page document. So my apologies for, in some instances, rushing through, and in some instances, maybe skipping some of the slides that you may have already seen. Okay, so the journey started, the genesis of this roadmap, just to share a bit of perspective, was that the SC was monitoring recovery rates within COVID, during COVID period, as well as the time when we were coming out of COVID. And one of the things that came up, and my fellow ETs will remember, the team of economists that we had kept telling us something's not right. The picture we're seeing in terms of recovery rate of the SME segment is slower than normal. And it kept coming up as a conversation, because normally they say these are the first of the block, and at one point the recovery rate of this segment was even slower than that of the country. So we were very concerned, and therefore thought that I think we need to figure out, because they represented such a big group to the GDP as well as employment, and needed to see whether there's something the capital market could do. So really this journey is a journey that we took, started in September last year, working with a team of consultants as well as a team within. And so it took us, we wanted this whole of nation approach just very quickly. 3 parts, landscaping and the benchmarking was key. Interestingly, this kind of information is not easy to find. So we actually went on a survey. We worked with our affiliates, ICMR, which we thank to give us the base landscape for Malaysia. We work with our regulators in the region to find out what was the diagnostics within the region, especially within the Asia Pacific. We also did our own surveys around the demand and supply part of it. Once we had the diagnostic as to what was the challenges faced, we then went into a solutioning mode, which was a whole bunch of ideation and solutioning workshops with industries, market players, to try and see what were the real problems and what were the solutions. Went into one-on-one engagements with some groups, as well as trying to develop action plans. And as you heard just now, one of the key things we wanted to make sure was this was going to be a roadmap that by the time you see it, some work has already begun, as opposed to having a roadmap that only begins after we launch. So you will see segments of the roadmap that has already, like today, Datuk Johan has already announced, work has already been done, and that was the intention. So we have a whole bunch of action plans, 36 of them, and we also have collaborators to the 4, there are many, but the 4 that already signed this charter, CGC, SME Corp, Matrade, and Cradle, we thank you very much, because there are specific things that we needed to work with them on. And the last leg was the socialization. So the team actually went to every one of the ministries, Bank Negara as well as Bursa and everyone, to just see that and get feedback about what the intentions were on this roadmap. So we're really happy that we're now kind of launching this finally. We talked about this and mentioned by both chairmen as well as the 3 speakers before. If you don't already know, the MSME and MTCs are a very important segment to the economy on 2 fronts. Both from a GDP standpoint, if you look, it represents almost 74%. In terms of workforce, it represents more than 60%. And in terms of numbers of companies and entities, it's in excess of 98%. So they represent quite an important part. This profile is not unusual. This profile is actually seen across globally, in fact. Maybe Anna can comment on that later. So this segment is an important segment to the economy. Through ICMR, I just wanted to do a quick recap of their interesting finding. The MSME discussions with regards to challenges they have in obtaining finance is known to all. But an interesting find in the ICMR report is the one on the right, the mid-tier. Now, the mid-tier companies are actually sort of under the custody of Matrade. In the report, we call it the missing middle. You know what happens, right? Everyone takes care of the young, upcoming, and everyone's well served on the large companies. And there is a missing middle that is struggling to get financing, and that probably has the nearest propensity to reach the larger companies. So that find was something which is why we added MTC specifically in the mention to the report. In terms of the capital market, just wanted to make sure that we're all on the same page what it means, because it is confusing, as we found that many SMEs and MTCs didn't know what we meant. The capital market has many layers of avenue for funding. Of course, known to all will be the ACE market, maybe a little bit the public lead market. These are what we call public markets. But we also have a slew of different other forms of funding, which is private equity, P2P, ECF, and even the VC. So all of this come under what we call, in a kind of colloquial way, the SME markets, as it were, because it serves up to the SME segment in particular. On the next slide, you see that the growth trajectory of this segment collectively has been obviously good. Granted that the base is generally smaller, but if you look at the profile on the 3 segments, the ACE market accounts for about 50% of the fundraising that you see. ECF and P2P, as well as VCPE, accounts for the next 25% each, right? What's interesting, though, is you see the growth in the 2 segments below. ECF P2P has seen an 84% growth, and VCPE 25% growth. And I think this is where you're seeing there is a lot of realization and effort to try and scale up the propensity of the private market side of the business or the capital market to see whether it can do more. Yeah. In terms of the goals that we set, and Datuk KSP talked about targets and KPIs. So we also took a reflection. So when you go back, sorry if I can just show you. So we were quite happy when we saw this figure. I mean, 26% CAGR, we should be very pleased with ourselves, we thought, and raised 6.3 billion, nice growth trajectory. Then when we reflected to say, okay, are we doing enough? That's when it hit us that we are raising only about 2% of the funding requirements. So when the total market raised, the MSME portion only accounts for 20% through the capital market. And based on literature, though it's a little bit dated, hence the challenge of data and studies and surveys and research, an Oliver Wyman report from 10 years ago indicated that a developed market has the propensity, the capital market has propensity to serve up to 20% of funding needs. We're at 2%. So we then went in and looked at all the different initiatives, ground up this assessment of numbers to see what can we do as a capital market. So the target we set for ourselves, which is lofty, we feel, is 40 billion in 2028, to be able to account for that much by that time in the next 5 years. But it cannot be an SC effort alone. It is going to be everyone in the room, the different segments, to try to make sure that we can actually do the fundraising. Just a small mention below, because this is something that we also looked at, to look at the challenge that we had. I think post-pandemic, the financing gap that was observed, the World Bank did a report back in 2017. It was 19 billion at that time. And based on our assessment, and that's where World Bank, thank you for helping us to look at methodology and robustness of that assessment, that funding gap arguably could be almost 290 billion now, with the post-pandemic and the challenges with all of the different geopolitics that's going around. So I think that's what we're looking at. When we went out to do the survey, 5 things we found to be challenging, probably nothing new to everyone in the room. First, of course, is the cost of fundraising, cost of compliance, just everything is expensive for a relatively small organization. Anecdotally, we also got comments to say that in the case of a lead market, the funding or fundraising costs could account up to 1/3 of the funds raised, meaning all of the money you raise is to pay the advisors and the regulatory compliance. So that was something we needed to address. The second kind of theme that we saw was, and a bit to our surprise, because we thought everyone ought to know what the capital market was, but actually the level of awareness as well as readiness is really, really low. And as Chairman mentioned, it's not a matter of just letting you know and then walking away, which is why you see the Elevate program of a mentorship, of actually hand-holding. This is very similar to one done in Taiwan called the Giza market. So they actually get involved with the companies to actually help them along that journey. The other thing that we found was, if you look at the third and fourth, that is the data and information asymmetry. This is quite severe because of the information that's not available. Bankers, to be fair, have a problem trying to assess credit. Investors have a problem to look at the robustness of information provided. So that's something we're trying to address. And last, liquidity concerns. This refers to, for the entrepreneurs themselves, exit options for them, control, the understanding of how do they actually end up when you actually take ECF, what happens to their control, how do they exit. They're not meant, the VCPEs also are also looking at those exit criteria. This we already know, I won't belabor this, but just to clarify, 40 billion, we are not looking to address the 1.2 million SMEs and micro companies. It is targeted to the 28,000, so these are the MTCs and the larger medium companies, and we have painstakingly made sure that it really, really supported NIMP and NETR, so that in those segments particularly. You've seen this slide, these are the supporting ministries, working with World Bank as well as the collaborative partners that we have. Now into the roadmap, I think this is where, again, I won't repeat this. This is the 40 billion. This is to remind the team of what we need to do. But the goal is by 2028, we can account, the capital market can account for 40 billion of funding requirements by that time. That's a 7x growth, by the way. And here's the overview of the roadmap. 5 guiding principles we talked about. 9 strategies. I'll take you through this in a second, but we also bucketed the roadmap into 3 sort of approaches. One, where it requires regulatory or product innovation. Second is market infrastructure, and third is the capacity building, which is awareness and things like that. So the 36 strategies, if I can just very quickly take you through this. One, we talked about, as the chairman did mention, enhancing the pathways. There are these initiatives that you see here is, it starts from what you have as introduction of an incubation program. That's the Elevate. Incubation program is where we identify companies that are truly ready to be taking on a journey of fundraising or listing in the capital market. Because the problem is that if you do it too soon, it's a very expensive exercise. The companies get very frustrated because they are not really ready to take the journey. So I think working with our collaborators, namely Matrade and SME Corp, we're hoping to actually do a proper funneling for companies that are ready to be made ready, rather than just everybody herd them through and then, you know, the bulk of the people are not ready yet, you know, and not needing those things yet. So having that kind of a pipeline starting from Elevate to look at clearer pathways for ECF and public markets, because we observe that, of course, from ECF into the public markets, the journey isn't so smooth. So we're looking at requirements, fast tracks, to see what can be done. The other one is also to look at whether or not we can have 1D. I won't go through all of it, just wanted to highlight some of it. 1D talks about the usage of growth matrix. So both the lead market and the ACE market does not have profit track record requirements. However, we find that traditionally, and I'm sure the SMEs in the room or the MTCs in the room knows that the advisors do apply the profit track record requirement despite there not being one. So what we're trying to do here is probably encourage advisors to look at different proxies of this, percentage of growth of revenue, percentage of market share, or something to indicate growth as opposed to just profit. And I think something that's already ongoing is the speed of IPO. That's already been announced earlier this year to try and get that down to 3 months. And I think Listing Grant SME Corp has already gotten some of those programs ongoing. So these are ongoing programs. The second one, just very quickly, was that that KSP talked about the lead market. This is something that the SC will look at, and we're going to be working also together with Bursa on this, which is that we've already announced the widening of the eligible investors, the sophisticated investors earlier this year. But we are looking now into widening the pool of listing advisors to include professionals like the audit firms as well as legal firms, just to have more advisors to be able to serve this segment. Second is the expansion of methods for remuneration. This refers to the possibility, as we have observed in other markets, the possibility of the remuneration of fees to be paid in shares with guardrails about what can be done, percentages and all that. But this helps them manage the cash flows as opposed to cash up front, but to be able to remunerate the advisors through some form of shares. The establishment of an SME-focused fund is something we are discussing with the ministry as well. This is likened to that of what you see in Korea, in the Korean Growth Fund. So there are a set of funds that's put together, and it actually looks to actually match or provide as a cornerstone investor like to a lead market. So that's that conversation around lead market. The third is innovation of products that can serve the MSME and MTC. Dr. Matsuda talked about bonds and instruments that can be looked at. I think that it's interesting to see whether bonds can be issued by a certain institution that can then invest in the MSMEs. That means you actually, the ones who can actually leverage off of their own balance sheet and be able to have the capability to reinvest into the MSMEs. The other one on 3A is actually interesting. It's in the US. You have it as listed BDCs, which is listed public private equities, where they again raise funds and use that capability to then invest, rather than having investors directly invest into PEs and into SMEs and MTCs. We also are in advanced discussions on 1F that I wanted to highlight. This is a WACA from my colleagues on the ICM side have been working closely with the team that is involved in the P2P and ECF to look at how WACAF development projects and assets can actually achieve fundraising through these platforms because they are Sharia compliant platforms that we have. So these are the different innovations that we're looking at. Number 4, very quickly, this is the interesting to VCPEs when we did our industry engagement with them. They found that the trade deals were very difficult to come by. As you can imagine, they needed to have their network of friends as to who and how they can sell it. So one of the things that we're looking to do is collaborate to actually get a bulletin board up where you can actually publish stakes that you have or interests that you may want to dispose of, which can ease the friction of trying to do trade deals. Number 5 is forging the private and public sector participation or collaboration. This was alluded to by Dr. KSP with regards to having more co-investments kind of format. Rather than just having grants that's issued under the national budget, we are actually speaking to 2 ministries in particular to try to have whatever grants that they've been given or budget to actually calibrate that into a co-investment model, just like the success that Dr. Johan talked about on MySIF. So hopefully with that, then we are able to mobilize more and actually be able to have more blended type instruments out through the private markets, which is the ECF and P2P players as well. The last one was, this is very key and a bit difficult, I think, but we're going to try to do this, which is the area of data, digitalization, and information coming together. For that, we looked around and actually we are working closely with CGC. I think they have the widest to be able to look at how we can connect with the likes of CGC's platform, with Cradle's platform, and even SME Corp's digital platform, to be able to direct the SMEs, because right now, they can't find their way beyond just the banks. They do not know where to go, what the options are. So I think the discussion is to see how we can also augment the efforts that we're doing on ground with digital presence as well. So that's the thinking. The next 3 is actually capacity building programs. One is for the MSME and MTCs themselves, which has a slew of different things from sustainability agenda as well as just being ready for fundraising. The second is the capital market players themselves need to be apprised of the nuance of this market segment, valuations and different sort of capacity building that we need to do. And the last one is actually looking at trying to get more investors in. For example, there's been a lot of incentive around corporate ventures. We like to see that grow a little bit more. Having more talent to be able to understand how you value these companies. I think these are all quite important to complete the ecosystem. So that in a nutshell is the 36. I know I'm taking a bit too long. This very quickly just gives you a visual as to how we see it, so that if you can imagine Elevate being the sort of beginning of a journey, we want the end goal that we're hoping for is that a company that goes through this program will be able to have 3 choices. One, that they know that they can go to a private market, ECF P2P. They can also choose to go to private markets, which is public market, which is LEAP or ACE. As well as if they don't want any of that, they can actually be visible on a trade board. So therefore, at one go, they may be able to look at 3 different options as to where they can exist. And of course, we are in the public market space looking to ease access as well as lower the cost as well. Again, these 2, I won't go through it. You'll see it in the books. These, again, we do this to make sure that we robustly check that the ecosystem that we're looking to create is as complete as it can be. And I tell the team that it's a dynamic document because we think it's complete until someone else tells us there's a missing piece, then we would probably be adding that in. Yeah? But that's how we see it. This is enhancing their ability to go down the journey, to be able to raise funds and go through the markets. And at the same time, on the supply side, we're also then trying to, the supply side is the source of funds. So we're also trying to look at how else can we look at the source of funding for them. This is a bit of a roadmap. I know it's a very colorful a roadmap that we have, but this is giving you a sense, it's in the book, a sense of time continuum that we see. 16 initiatives that we hope to start and hopefully complete within the first year, and then another 15 in the next 2 years, and hopefully at the back. And normally roadmaps are backfilled, but we're trying to front fill this thing with that challenge. Okay. And again, last slide is again, the intent is for us to be able to look to raise the 40 billion to address at least 28,000 of the segment that we, the addressable target. The whole of nation approach cannot be mentioned enough, and to that actually Tan Sri Mune mentioned it the first time at the ICMR report, because we found that in the first research that this is not one person's problem, this is an entire nation's problem. And that's the roadmap that we have again. That's about it. Thank you very much. If you needed more information, you can drop by the email, but I think we'll show a QR code later. Thank you.
Thank you, David. Okay, taking you to giving you a wider view, please welcome Ms. Anna Cavajo from World Bank. Anna is the lead financial sector specialist for the World Bank.
Good morning, ladies and gentlemen. It is a pleasure for me to be here participating in this important event and sharing some of the lessons that we have learned from the work that we do supporting emerging markets and developing economies in closing the SME financing gap. Let me see if, it's here, okay. So let me start by saying that the case to support SME financing is as compelling as ever. When we look at the role of SMEs in the economies globally, we have exactly the same experience that the chairman expressed in terms of the contribution that SMEs do to the economy and to the workforce. Yet, in most countries, okay, this is a bit challenging, okay, perfect. Yet, in most emerging markets, what we see is that they face financial constraints. The credit gap alone is estimated in about $5.7 trillion. That is about 19% GDP, and underpinning it is an underdeveloped of different financing sources, especially the alternative sources like capital markets. And if we look at the equity gap, it's even starker. But on the other hand, what we see, what we have learned, especially from recent research conducted by my colleague Tatiana Didier, is that closing the financing gap could lead to tremendous impact in terms of productivity and resilience. And let me give you two main findings from those reports. First, that closing the MSME financing gap could lead to productivity gains of up to 86% in middle-income countries. And is the smaller firms, like the ones represented here, the ones that would benefit the most from those productivity gains. The second important finding from that research is that access to finance lead to more resilient firms. And we also conducted research in this area, and during COVID time, for example, the firms that were more able to withstand the shock were those that had access to financing. But our research also shows that the financing mix matters, and that Johan referred to it before. And what do I mean by this? That yes, debt financing will remain the main key source of financing for many MSMEs, but equity financing is important, especially for innovative firms. So then, when we look at this important agenda, the important benefits that closing the financing gap would have, but at the same time, at the persistent challenges that emerging markets face that are very similar to the ones that Salina mentioned, we decided to conduct a review of the support programs in advanced economies and emerging markets to distill lessons that could help us support better emerging markets. And those lessons and those recommendations are compiled in a report that is forthcoming, an SME finance policy note. And so you are getting a little bit of a sneak preview of that report. And let me start saying that at the high level, what we found is that it is critical that emerging markets develop holistic programs that take into consideration both enabling environment and targeted financial interventions. And what do I mean by this? Enabling environment are changes in policy, for example, that improve the environment in which business operate and access financing for all firms, but benefit more SMEs. And for emerging markets, this should remain a priority because they have limited fiscal cost, but they could lead to sizable gains. So in the report, we developed 8 recommendations that basically are aimed to expand the universe of alternative lenders, including in capital markets, as well as equity financing. But what we also have found is that for most emerging markets, enabling environment interventions are necessary, but are not sufficient. And most countries are gonna need what we call targeted financial interventions. And this means measures that go directly to affect the supply of financing to SMEs. And in most cases, countries are gonna need both interventions on the equity and on the debt space. But they carry important fiscal costs. So it is critical that as governments deploy them, they ensure that they are effective. And so we developed 7 recommendations that their goal is to improve the effectiveness of these interventions. So within this high-level framework, you would ask me, so where do capital markets fit? How important could capital markets fit in this story? And the key insight that we have for you is that in emerging markets with more developed capital market solutions can have expanded role in the financing of SMEs. This is not theoretical, this is not conceptual, we are seeing it in practice. But what is critical is to think beyond the traditional ideas that we have of capital markets and the traditional solutions that we all have in our minds when we think of capital markets. And so what do I mean by that? What do we mean by that? First, on the debt space, we see an expanded role for capital markets in 2 ways. First, indirectly, capital markets can serve a very important role being the refinancing facilities for those financial institutions that in turn provide financing to SMEs. For example, they could be the refinancing facility for banks and non-banking institutions, providing them access to long-term financing via instruments like plain vanilla bond issuances, SME securitization, and this in turn would allow them to have a scale to reach more SMEs and even to provide better lending conditions to those SMEs. But we also see a direct role. Again, providing direct access to SMEs to capital markets, but mainly through what we call non-traditional solutions. And what do we mean by this? For example, the peer-to-peer lending platforms that you have is one of those solutions, but we are also seeing other solutions across the world that are also beneficial, from debt and loan originating funds to mini bonds. So this is on the debt space. On the equity space, we also see an expanded role for capital markets. And again, when I look at Asalina's slide, it resonates very much, because what we are talking is also these non-traditional solutions that go from the venture capital, the private equity space, passing through those equity crowdfunding platforms and moving to small offerings in bespoke, more streamlined markets like the SME markets that Asalina talked and that you have here in LEAP and in ACE. And for both equity and debt financing, I want to highlight a finding from across the experiences of many countries, which is the importance of funds and platforms as an aggregator that can provide a scale to capital market solutions and make them more attractive to institutional investors. And that is key because that's where sizable amount of money is. And so that's what those vehicles are so important. So we develop a taxonomy to help countries think through the type of capital market solutions that they could leverage. And in the end, what the mix and the prioritization depends on country context. But again, it's a little bit of what I told you on indirect solutions, direct solutions on the debt financing side, and on the equity side is mainly direct solutions, but non-traditional solutions. And the point then is, okay, we know what type of capital market solutions, but then the question is, but how do we give them traction? How do we make them work? And so I'm going back to that general framework at the start and saying the first role for governments is to put in place the enabling environment. And let me disaggregate this in what does this mean in the context of capital market solutions. First, I think it's the ones that would come more or easier to the minds of many of you, is the legal and regulatory framework for these instruments. The authorities, including the Securities Commission, need to make sure that the laws and regulations for these innovative solutions are in place. I'm talking here about laws and regulations, for example, for SME securitization, for SME debt funds, for mini bonds. And I'm talking here, and Saline already reflected to this, about ensuring that there's proportionality, that the requirements take into consideration the size of companies and the type of investors to which the offers are addressed and make proportionate regimes, and also regimes that leverage technology, financial technology. That's the first. But the second, especially in the context of debt solutions, it is important to ensure that the basic credit market infrastructure is in place. What do I mean by this? I mean credit reporting systems that adequately leverage alternative data, to which also alternative lenders, including capital markets lenders, have access. I'm talking here about collateral registries that are digitized and that are interoperable. I'm talking here about specialized insolvency regimes that facilitate the exit of companies and that facilitate that entrepreneurs come back to more businesses. The third type of action that is needed is also competition. In many of our countries, what we see is a very consolidated banking sector where it's very difficult also for alternative lenders to compete. And what we see here is efforts in different countries to spur competition, to foster competition. Open finance is one of the avenues that holds a lot of promise, and we're seeing countries, not just the advanced jurisdiction like the UK or the European Union, but also emerging markets like Mexico, like India, like Turkey, going to implement this type of regimes. And we also see governments implementing innovative solutions, like platforms that bring together multiple lenders to compete and therefore reduce the rates that are given to investors. And we see these platforms in emerging markets like yours, in countries like Colombia, like India, and programs like the referral program of the UK that, again, are trying to foster a wider universe of lenders, including lenders in the capital markets space. And finally, we see the importance of soft interventions. And as Alina mentioned already a bit of the challenges here, because it's about making transparent more information of these SMEs. And we see tremendous efforts by governments, for example, to consolidate information that is in the public space and give ownership to it to SMEs, and then SMEs can make it available to potential lenders and investors. And we see initiatives in countries like Argentina, or we also see initiatives to consolidate all the offering of support programs to SMEs so that they have one-stop shop where they can know what programs exist. Initiatives like that in countries like Morocco, and also initiatives, again, like Asalina mentioned, of capacity building. It's not just investment readiness for you, the firms, but also for the financial intermediaries. And that's a very important part of the story. But in many cases, as I had mentioned, it's not going to be enough. What we are seeing is that in many countries, to propel these solutions, it is necessary for governments to take additional steps to deploy targeted financial interventions. And they are important because they allow to align the risk-return appetite of investors, and they also provide a demonstration effect. And the main two types of interventions that we are seeing across the board is, on one hand, guarantees, and we are seeing them precisely with the objective of de-risking. We're seeing them in vehicles or in solutions like SME securitization in countries like US, like Spain, but also other type of debt solutions, for example, mini bonds and mini bond funds in countries like Italy and Colombia. And I want to highlight, I'm not just mentioning advanced economies, I'm mentioning emerging markets that are peers of yours. And the second type of solution is investment and co-investment programs, in this case mainly to the objective of providing a scale and a demonstration effect of bringing more private capital. And we have seen these type of programs in equity financing, mainly in the venture capital space for quite some time. They are very common both in advanced economies and emerging markets, but we are now seeing them also in the space of new debt solutions. And for example, you have them already in the case of lending platforms. Examples like this we are also seeing in other countries, like in Colombia, like in UK, in relation to other type of solutions, for example, in relation to factoring platforms, but also in relation to debt funds. There are other type of interventions that countries are trying and testing, for example, taxes, although to me, some of them is not so clear what the impact is, so there has to be a little more care in their use. But as I had mentioned at the beginning, all these recommendations come with a cost, with a fiscal, all these interventions come with a fiscal cost. So in our report, we provide 7 recommendations to ensure that they are used effectively. I'm not gonna go over all the recommendations that are in that slide. Let me just mention 2. And one that I was already mentioned by Datuk Johan. It is not enough that your targeted financial interventions reach SMEs. The goal should be to use them deliberately to bring private capital. I hear that your MySIF program is on a 1-to-4. It's precisely about that. It's precisely about using the government money to provide confidence to investors and bring the private sector along. That's the first. And the second is that because these interventions have a fiscal cost, it is critical to enhance monitoring and evaluation. And I'm talking here about transforming those objectives into indicators that can be tracked and to enhance evaluations of the impact of these interventions that then can allow the government to understand what is really the effect and whether the course needs to be adjusted. So just in closing, when we look at all those experiences vis-a-vis the capital markets roadmap that has been put forward by the Securities Commission, we see that a lot of these things resonate. And what we concluded is that the capital markets program, the capital markets roadmap provides a solid foundation for an expansion of the role of capital markets in SME financing. And let me give you the 3 reasons why we say this. First, we see that the plan provides a holistic approach of the role of capital markets across both debt and equity financing, considering both the direct but also the indirect role that capital markets can have. We see that there has been a clear identification of solutions, many innovative solutions, that could be viable in the context of Malaysia. And when we compare against peer countries, they are very much aligned. And we also see in the plan an acknowledgement that both enabling environment interventions and targeted financial interventions are needed. So with this, I just want to close, congratulate the Securities Commission, and saying that as Dr. Johan said, we are looking forward to supporting you in the implementation of the roadmap. Thank you very much.
Thank you, Anna. Thank you, Anna. Oops. My microphone. Test? Test. Can you hear me? Yes, thank you. All right, we've come into the break. I think everybody wants to get out. But before that, allow us to put up the QR code for you to download the report. It's on our website. Team, can I have the QR code? There we go. Now, we will go into let me see, 20-minute break, I think, if we can, and come back, because we need to do a little bit of catch-up. So if I could ask you all to come back in 20 minutes, so that'll take us up to about 10 to 11, and that way we can have the panel session. The panel session will talk successful fundraising through the capital market. And we have Raja Jasrina, Raja Arshad, Kashpinder Singh, Sinsian Ang, Lavini Tiruchalvam, and Azrina Azmil. Moderating the session is Asmizi. So let's take a 20-minute break and see you back here, ladies and gentlemen. There are 12 booths outside whom you can also interact and engage with people from KLDX, from Lead Capital, Pitchin, and the list goes on. So see you back. Please, please come back, and we'll see you shortly. Thank you, everyone. Welcome back, everyone. If I could get everyone to come back into the room, the panel is here. Panel members are all here. Yeah. Hey, where's my? Yeah, my paper has gone missing. Hey, 4, 5. Where's my paper gone? Oh, here. Mixed up. Missy? Missy? Okay, ladies and gentlemen, let's start with the panel. Can we put up the slide, the next slide for the panel session, folks? So that they can sit accordingly. That's right. So, ladies and gentlemen, welcome back. I'd like to, if you've got kawan-kawan outside, please let them come in. So let's start with the panel. Successful fundraising through the capital market. The moderator of the session is Noor Azmizi, Deputy Director, Strategy and Research, SC. And he will have Raja Jasrina Raja Arshad, Founder and CEO, Purely B, Kashminder Singh, Co-Founder Pitchin, Sin Sian Ang, Co-Founder Cap Bay, Lavini Tiruchelvam, Founder Baby Dash, and Azrina Azmil, Deputy General Manager, Core Digital Markets, SC. If I could invite all panel members to come up on stage, please.
Test.
Yeah, I think it would be helpful to sit according to the photos. Yes, you're quite right, Lavini. I think your mics are live. They're on the table. So you will pour yourself some water. Over to you, Mizzy. Over to you, Mizzy.
Okay, thank you. We can start?
Yes, please do.
Okay, ladies and gentlemen, esteemed panelists and distinguished guests, welcome to our discussion on successful fundraising through the capital market in conjunction with the launch of the MSME and the MTC roadmap. Today, we will be taking advantage of the collective wisdom of our panel sessions to talk about strategies and approaches on fundraising in the capital market. We're going to cover a wide range of topics, so to speak, from regulatory requirements to emerging trends. So without further ado, let me introduce you to our session, our panelists right here. Let's start with Raja Jasrina Arshad. Jasrina is the CEO of Purely B, and also a health and wellness advocate, right? So she's also not just a tech entrepreneur, but a health and wellness advocate. And Purely B is a platform that has 7 million users at the moment, if I'm not mistaken, and has presence not just in Malaysia, but in Singapore, the US, Australia, and France. And she has benefited from 2 rounds of funding, I believe, using the ECF or equity crowdfunding format. Yeah. Moving on to Kashminder Singh, orang lama lah, as they say in the industry. Cash is the CSO and co-founder of Pitchin, a leading ECF platform provider. To date, ECF has helped 175 companies as SMEs, raising a total of 320 million ringgit Cash is also the co-founder of WTF Accelerator, and also a partner of Jati Growth, and is quite a believer in democratizing access to capital, specifically for the smaller SMEs. Then we have Mr. Ang Jing Chiang, who is the CEO and co-founder of CapBay, a peer-to-peer financing platform and a supply chain finance platform. Jin Xiang is also the CEO of Kenanga Capital Islamic, a factoring company. And Jin Xiang is actually quite a leader in fintech, and it looks into leveraging technology to optimize the financing and funding options for companies. And then moving on to Lavini. Lavini is the CEO and founder of Baby Dash, an online retailer and a one-stop shop for baby products, I presume, baby products. Baby Dash has a community of, an active community of 180,000 parents, and offers up to, I think, around 11,000 products in her platform. Baby Dash was shortlisted in the Gujarati 50 by Digital News Asia, and it was the #1 online baby store back in 2017 by Telepress. Baby Dash has now presence in Singapore and is looking to expand to more countries. And finally, last but not least, definitely, is my colleague, Azrina Azmel, who is in the digital markets department. Azrina currently heads the core digital market department, which is part of the DSI, or Digital Strategy and Innovation Business Group in SC. She has, through her tenure in SC, has led the development of digital investment management and the regulatory framework, and she was involved in the development of policies in relating to Islamic fintech, equity crowdfunding, P2P financing, venture capital, PE, investment banking, and Islamic banking as well. So I'm quite honored to have such a distinguished set of panelists here. So before we actually start, there's some ground rules. Since we've only got an hour, so I think we're going to reserve, probably, if we can, the last 10 minutes or so for Q&A. Let's run through the discussions first, then thereafter we'll move to the Q&A. So okay, let's begin the icebreaker session, if you will. Let's start with Lavini. Can you tell us a bit, I know you pivoted from a career in banking, right? Tell us a bit about your inspiration or motivation that caused you to say, okay, I'm going to move on into this entrepreneurial journey as soon as you figure out the mic. Is the mic working?
Oh, it's on. Shall I test?
Okay, there we go.
There we go.
So,
Right.
inspiration behind moving into being an entrepreneur.
Oh, wow. Okay, great question. Actually, I never knew I was made for entrepreneurship. I kind of stumbled upon it. And I'm really glad I did, and definitely never looking back. Yeah, so for me, I was a banker for a little while, and then I actually started a dance studio, and I created the KL International Dance Festival many years ago.
Wow.
Because we wanted to do something different in Malaysia and to bring world-class talent. And we did that for a little while. And then I decided I was hungry to do something which was very scalable. And that's why I went into e-commerce, because we started at a time where nobody was selling milk, diapers, and all the baby necessities as a one-stop shop online. There was a very clear gap in the market. So we took that opportunity and decided, let's do this and let's scale it.
Thank you,
Yeah.
thank you. Interesting. So let's move on to Jasrina. So you started in 2015, if I'm not mistaken, right? Purely B? Right, so looking back, the days until now, jalan tak? Okay, we're good to go. Maybe you could share with us some of the biggest challenges and how you overcome them over the years. Because I understand now your business has scaled tremendously, internationally now even.
Yeah. So in the beginning, I mean, like Lavinia, I stumbled upon becoming an entrepreneur as well. It wasn't something I had planned. It was very much deeply rooted into my own personal health needs. So I had long-term health issues. I used to have eczema. I used to get migraines every 2 days. And all of this stemmed from an unhealthy lifestyle and diet, which was due to lack of awareness, lack of knowledge, lack of accessibility to having a more sustainable, healthy lifestyle that can be catered to your lifestyle in Malaysia, as someone living in Malaysia in Southeast Asia. And being able to do it sustainably, as in like you don't want to eat salads every day. It has to be something that you can enjoy, incorporate, and enjoy your life and be healthy. And nobody was offering that in the market. It was actually through my own personal experience, learning from people in the West, incorporating it to my lifestyle in Malaysia, where within a very short period of time, I was able to overcome all those health issues. So I overcame eczema, my gut health, digestion issues, naturally, when modern medicine didn't work for me. That's what made me want to create Purely Be, because if this didn't exist, I needed to help others the way I helped myself and pull together some of the best experts in Malaysia, nutritionists, natural doctors, medical scientists, to create Purely Be so we can provide this awareness and education to others. My intent was to spread education and help others. So the challenge that we faced, the good thing was that we were able to build a community through education. The challenge we faced was monetization.
Right.
Because we had actually raised money through investors, not through equity crowdfunding at the time, through venture capitalists, and we were growing the company community-wise, but we hadn't yet figured a monetization channel that was in line with our values. Because we talk about natural health, so there were a lot of products we did not advocate, and a lot of brands that we didn't support that were not in line with our values, and they were the ones who wanted to work with us. They were the ones who had budget to say, I want to do branded content, sponsorship, and so on. So it took us a while. It took us about 4 years to get through the right monetization channel, which is where we are today, where we developed our own line of traditional Malaysian superfood blends. So what we do is that we're still providing you a natural health solution, going back to our heritage, taking the jamu, the ramuan, the Malaysian natural medicine of our ancestors, but modernizing it for today's younger generation so they can benefit the way our grandparents, great-grandparents all did, from the power of ulam and nature and all of that. But it took us 4 years to get there. It was a challenge, but thankfully, because of the community we had built, and we'll get to the topic of it, of equity crowdfunding and whatnot, we were able to sustain to get to that point.
Right. So basically, they were both intrinsically motivated, both of you, and the social aspect of your business allowed you, albeit taking a longer time, but allowed you to build the trust. And that trust helped to move on to equity crowdfunding and whatnot. Thank you. That's very insightful. Let me move on to maybe Xinjiang. Just tell us about your future plans, maybe your aspirations for CapB.
Yeah. So, hi everyone. So I think we started in 2017, right? Over the past few years. Managed to provide more than 3 billion worth of financing, more than half of which was done via the P2P platforms to SMEs in Malaysia. I think we have a lot more plans for Malaysia. I think that 3 billion is actually a very small sum compared to the huge SME gaps, financing gaps that we are talking about in Malaysia, estimated between 55 billion to 90 billion US dollars, and I mean, various sources, but it's a huge number. So I think there are a lot more things that we are doing in Malaysia to support. So specifically 2 things that we are hoping to support SMEs more. Number 1 is actually in connecting the SMEs not just to the, I call it the alternative money, which is public investors' money, but it's actually about connecting it to the traditional money, which is a lot bigger. So via our multi-bank supply chain finance platform, we have brought in some of the banks, asset managers, that collectively, all this while, have provided a big chunk of funds to the SMEs. So I think that's where we will see that the cost of fund for alternative lending will start coming down, getting closer to what SMEs are expecting from the traditional sources. The other one that we are hoping to do, in fact, we have started last year expanding into Thailand, China, Singapore. I think the main thing that we're observing is that when Malaysian companies go to other countries, in say, let's say Thailand as an example, they are always seen as foreign-owned entities, which they are. They are foreign-owned entities, so the banks over there are not supporting our Malaysian companies. So what CapBay have been doing is that whenever we go to those countries, we actually are there to support the Malaysian companies who not just are already expanding to those countries, because we know them in Malaysia, but also when Malaysian companies try to export to these countries, CapBay is already there to help them improve the collection and manage the collection risk in those countries.
Like
so these are the things
like
that
bridging sort of.
Yeah. So these are things that we started last year and will continue over the next 2 years as our focus.
Excellent. How about you, Cash? What's your plans?
Thank you and good morning. Okay, so we of course started 1 year or so earlier than Xinjiang, and we brought equity crowdfunding to Malaysia. We were just talking with Azrina just now when it was launched here in 2015. There were quite a lot of skeptics that said that it may not take off in Malaysia, but we managed to prove them wrong. I think as an industry, equity crowdfunding has become an established point for SMEs to raise funds for growth, for their ideas, for innovation. And yes, I think Pichin has done quite well. We've, as mentioned, we've helped about 175 companies raise money, more than 325 million raised, but we are only still scratching at the surface, right? So there are like 900,000 to 1 million SMEs.
Right.
So for us, we are just starting, right? So we too believe that there is a lot of opportunities going forward, and we don't just want to be known as an equity crowdfunding platform. Right. We want to be known as the digital fundraising and investment hub. Right? So our aim is to slowly grow into an organization where an SME can come and actually find multiple avenues to raise funds. Among them, for example, we launch a secondary market very soon. Right? So within a month or so, Pichin will launch a secondary market. So this will now enable companies to do a bit of liquidity. So investors can have an option to sell their shares. We're going to be the first, I believe, and we're happy with that. Pichin also obtained a license to do initial exchange offerings, which is what we call token crowdfunding. This will enable companies to use more innovation when it comes to fundraising. Instead of just equity, maybe offer assets, maybe offer revenue, which are all tokenized. So that's where we are heading.
Very interesting. I think that secondary market would be quite interesting because if I'm not mistaken, one of the big problem statements that's listed in the roadmap was liquidity concerns from the investor standpoint. So that would greatly ease address that problem statement. Okay, thank you very much, guys. Let's move on to options in fundraising. But I think before we start, let's have a listen to my colleague Azrina. So Azrina, you've got quite an extensive experience in SC, having been here for quite a bit. Maybe you could set some context or share with us the thinking around how SC has developed the capital market over the years.
Thanks, Mizi. And I don't know, are you implying that I'm very old when
No,
you say
no.
experience? But anyhow,
I'm implying you're wise.
Okay, I feel like Yoda. But anyhow, just to set the stage, I mean, at least the capital market that you see now is very different from what it was, say, 20 years ago. If you talk about the first capital market master plan launched in 2000, at that point, the capital market consists mainly of the stock exchange and also government debt securities, government debt, right? For forms of fundraising. But 3 master plans have been launched, right? And just to show that the capital market has evolved over the years, it has been strategically poised or positioned to support the development of the nation.
Right.
Right. And as it evolved, we know that to say that capital market is dynamic, maybe it's an understatement. We know that Malaysia has actually evolved in a way that we did not foresee, and then investor preference, business preference has changed as well,
right.
and also technology advancements, right? So if in the past Securities Commission has always been a place where people are a bit intimidated because not everyone can raise funds
Correct.
in the capital market. It was never for the small businesses, so in a way it was a bit more aloof. It was a place for investment banks to come in, submit corporate proposals, right? But when we launched, when we succeededly launched the first and implemented the recommendations of the Capital Markets Master Plan 1, we felt that there is a need for us to expand the supply of risk capital.
Right.
In private markets, right? Before someone or before a company can grow big enough to navigate well in the public market, we must nurture the small ones.
Right.
And these are, entrepreneurs that you see today. If we don't give them a chance when they're small, how do you expect the funnel will fit into the bigger markets?
Exactly.
Right. So that gave us, we have to look at this, and the rise as we enter the digital era and people are more comfortable using their mobile phone to do transactions. That's where we roll out the equity crowdfunding framework in 2015 and later the P2P framework.
Right.
And we knew that we could do that.
Right.
If we were to launch it in 2000, it will fail. Right? But the
right.
timing needs to be right, and the ability for companies to be more connected to their funders is key. Because in the past, the banks will just look at you, okay, fine, you fit within a certain criteria. But when you go through the crowd, you are attracting like-minded investors or people who believe in your product, and they don't mind to be part of your growth journey. And sometimes, as I think Jess and Lavinia will contribute later and say that they contribute to the development of the product as well. And they, it is the power of the crowd, it is the wisdom of the crowd, and this is something which is quite earth-shattering, I thought, at that point in time. So we will and continue to grow both the P2P and ECF market.
Yep.
Even with P2P, I see a lot of innovation taking place. And when I think Sing Xiang, when he first came to us, we said, okay, what innovation are you injecting in terms of your credit assessment? Because if not getting the registration, right? If you're doing the same old type of credit scoring and the same investors that have been rejected by the traditional source, it's the same businesses that have been rejected by the traditional sources for funding, will be rejected by you as well. So those are the kind of innovations
Right.
that we want to see more of in the capital market.
Right. To address the one that's underserved, I suppose.
Yes,
right?
yes.
Okay, great. Let's move on to Lavini. Can you tell us about your journey in fundraising and how you, amongst others, finally landed into the ECF domain, and what was your thought process behind it for the benefits of the SMEs here?
Sure. Actually, it was a strenuous journey because I spoke to so many parties. We spoke to banks, we spoke to VCs, quite a number of VCs actually, and this was in the early days, and we just were not sure what was the right way forward.
Right.
And it was also the very early stages of ECF. So we
Right.
actually did our first round of ECF in 2017. And I think, and I spoke to Cash actually at Pitchin. We spoke to a few other platforms and we felt most comfortable with Pitchin because they answered all our questions, and I had that kind of trust in what they were doing. And what I need to say is, there's a huge difference when you're talking to all the different parties involved in fundraising. I'm very glad we didn't go down the route of banks. Not that banks are bad. What I'm trying to say is the benefit from ECF is tremendous because we roped in the collective, the community of mummies, people who were already buying from us, who were our customers, and they buy regularly from us. Suddenly they had the opportunity to own a little bit of Baby Dash. And then, so they're contributing towards a company which they're buying from anyway. So it's symbiotic in that sense.
Interesting.
Right? And so then by word of mouth, they would tell their other friends, you should buy from Baby Dash because it's also their company. And so it was really nice in that sense. And the other very clear advantage is, since then, I've done 2 rounds of equity crowdfunding. And obviously, with time, we've grown nicely. And the big benefit I have is I have a large pool of investors. We have about 162 investors in total. And and I can, each one actually has some kind of value to bring to the table.
Right.
So obviously you do have the silent investors, but you also have those who really want to get involved and be part of the business. So I've actually taken some of our investors for meetings as well.
Oh.
Yes, I've taken, in fact, I've engaged a few of them and said, come along with me, let's do it. Because those who are really passionate about a particular area, they come along with me and then we brainstorm together. So I can't take a bank with me to the meeting, right? So very clear advantages of what we've done, and Pitchin was a tremendous help in everything we did. So
By the way, when we were waiting in the holding room, we also learned that the person sitting on the right, stage right, of Lavinia is also an investor in both of these businesses. So Xinjiang has invested in both as well.
Also, fun facts. Cat Bay, when we started, we actually did a round of equity crowdfunding as well. So about 100 over investors put in, I think, close to 4 million ringgit to get the business started. So it's good that, I think they will get a good return. And then, it's good that their support eventually also created this kind of a multiplier effect that billions of money managed to be channeled to SMEs because of the equity crowdfunding.
Right. So you not only get funds to expand or for your capital, right? You also get a community that's supportive of your business, and also buyers as well, if I hear you correctly, Ravi. Interesting. Jasrina, what about you? What do you think? How has your journey to the capital market raising funds helped your business?
Yeah, I mean, it's definitely, for us, as I mentioned in the beginning, we built a community first. Equity crowdfunding was almost a no-brainer as to be the way to raise funds, especially during that time when we were no longer attractive for a venture capitalist firm. In the beginning, we were. But as we had developed over time and realized the kind of company we wanted to be, where we wanted to go more into consumer goods, we were no longer a tech company. And when you're not a tech company anymore, it's a lot harder to get VC funding. But at the same time, our valuation was that of a tech company.
Right.
So we did have those challenges of, okay, how do you raise from the public, from your community, and justify your valuation, which is not based on revenue because you don't have any revenue. And you are at a 10 million ringgit company. So how do you justify that? And the great thing was, because of what we had built for our community, they could see the value in that. It didn't have to be monetary. It didn't have to be because you generated X amount of sales. But you have grown this much in helping the community improve their health through education, through community engagement, and the size of your community is now how many million cross borders. It's not just in Malaysia. You have people in Singapore, and Indonesia, and Australia, and the UK, and the US, without spending much money at all. Most of it was organic, and that was enough. When you raise from the community, that's enough for them. When you try to say that to a VC, it's a lot harder. But if you say it to your community and they can connect with your brand and your vision and what you're trying to do, they could see you are a 10 million ringgit company. I will invest in you. And that really helped us a lot. That helped us get to where we are now, where we can expand to the US, and we are having physical presence there, but we couldn't have done it without that bridge, which was the equity crowdfunding, to take us to the next level. If we were stuck there, I don't know where the company would have gone. And so raising through our community, it definitely helped us get to the next stage, be able to really execute our vision. But raising for our community also enabled us to, like you said, be able to grow our brand further in the right direction. They felt more invested to help us get there. And we had over 100 investors as well. We did 2 rounds, actually, of equity crowdfunding. We did one with Atta Plus. And then during the pandemic, we did another round with Eureka, which is a Dubai platform. And the reason why we did 2 different ones, we wanted to engage with different networks. So the first one is very more Malaysia focused. Our community is very much Malaysian. I believe it was about 3 million or so in Malaysia. And so for us, that was what we wanted to focus on. And then when it came to the pandemic time, we said, okay, we want to be able to grow internationally. We want to be able to get assistance, strategic investors, angel investors from people outside of Malaysia. and who feel like they are invested in this because they maybe invested maybe 1,000 ringgit, 10,000 ringgit, whatever it might be.
Right.
And so Eureka helped us with that. We had like Hong Kong, UK investors, Malaysia investors too, also invested through Eureka. But the strategy was now I wanted to expand my network of the ECF investors to be beyond Malaysia. And that helped us get to where we are today. But the community has really helped. And I'd like to also share that it doesn't stop there. So actually with our equity crowdfunding investors, some of them, because we develop very close relationships with them to keep them posted on our progress, that they would reinvest as an angel investor, as a direct shareholder. So actually one of our biggest angel investors right now started in equity crowdfunding. They started with a small amount. They followed our journey in the next 2 years, keep closely, like probably one of my most difficult investors, chasing me every day on WhatsApp, how's it going, ask me
they're on
all these
WhatsApp.
questions, the most, but it paid off, became one of our biggest direct shareholders in the long run because they were happy with the progress, they would see the way the business was going. So it doesn't stop there, it starts there, and it
It's
just
almost like you're
can
scaling.
amplify
yes,
greatly.
You guys are scaling up community, right? Thanks to the platforms, etc. Right? You're scaling up the reach for the community to support your businesses. It's very, very interesting. Right. So I'm going to move on to Azrina. So although it hasn't come up yet in this forum, but it came out earlier today in Datuk Johan's speech, I think, if I understood it correctly, as well as throughout our tenure here in SC Lagan. But the main, probably the main perception, I would say, is cost as a concern when you go into the capital market, right? Issuance costs or compliance costs. Can you maybe tell us a bit of maybe what we're doing in SC to address that, whether it's already being done or is percolating within the management?
Yeah, I suppose when you talk about cost, it's very subjective, right? And of course, people want to raise financing cheap. But the reality is, if you're established, yes, you'll have different sources of financing to tap onto. But when you're a young, emerging, or struggling company, the banks won't look at you, right? It's that, look, you've got to have a track record, right? And this is where, when people say, look, I don't want to give away my equity, but perhaps that's, at that point in time, is the right way to do. Reason being that, sometimes you've got to be able to have, firstly, access to capital. It's not just about access to cheap capital, but without even funding, any form of funding, you can't even grow, right? So it's all about maybe allocating just a bit of your equity to find that intelligent capital or that crowd that believe in you, in your business, right? And this is where then you ride the wave. And if the wave is good, then it will bring you somewhere. And I've seen issuers in the equity crowdfunding space, let alone a tech company like Angkasa X now going into NASDAQ, right? And Solar Gore or something like that going to the LEAP market, listed in the LEAP market. I've also seen Goreng Pisang seller who during the pandemic went online and scaled with P2P financing, right? So you see that different sort of MSMEs coming into the alternative financing space, which is very heartening because it just goes to show during the crisis, these sources of financing helped when the banks are tightening.
Yes.
And it is true test of their viability.
Yep.
Usually the crisis will say, okay, are they going to be there for you? And they did. And I think ECF, it experienced explosive growth during pandemic. So when you talk about how do you help address the risk in this in the private market, it's unlisted and things like that. So the government saw this. The government saw success stories at the beginning of the year of ECF and P2P, and they said, look, I think we can come in, we can catalyze growth because of the MSME agenda, but it is a step higher than what a grant would do, right? They grant, say for example, 250 million so far to help to boost the MSMEs in the ECF P2P market, and now With that 250 million, we have invested 930 million into MSMEs.
Right, yeah.
Can you see the multiplier effect
Right.
of investing into MSMEs
Right.
and it recycled back, as opposed to if I had 250 as a grant, it'll just stop there.
Yep, yep.
Right?
Exactly.
So that's the beauty of where the government came in. And as KSP Datuk Johan said, I mean, maybe it's a good way, the wisdom of the crowd. The
wisdom
government
of the crowd.
comes
Yes.
not as a cornerstone, but as a last mile funder.
As the last mile fund,
right?
exactly. So they don't make the decision, right?
So
That's
the
what you're
public
saying,
decides.
Yeah,
If
yeah.
it's good enough for the public, and then we can come in to close the deal.
To close the deal,
Right?
exactly.
And we're not here to pick winners. And it's, oh, it's the crowd. This crowd, it's not me, right? But this is where this mechanism was very powerful. And when we had it every 4 ringgit raised by the public, we raised 1 ringgit, right? But we switched it on, maybe better allocation when we feel that perhaps a black swan event could happen, right? When we don't expect something, maybe we can switch it to a better allocation, and boom, the pandemic happened.
Right.
And at that point in time, every 2 ringgit being raised, we allowed the government to come in. And
Right.
it's regardless of industry, we came in to help that, to help them. And it grew.
We're using the same sort of mechanism. right?
Mechanism,
Yeah, yeah.
but the allocation is better.
Yeah,
Because instead
exactly.
of every
So you
4,
can tune it
2.
based on economic
And
conditions,
you
etc.
see a lot of this industry, the car dealers from the P2P, they manage to raise funding because first of all, their sole prop maybe not something that the banks would come in to finance, but there was a need for people to have cars because of the RMCO. You know, you can't go into public transportation. The second-hand car dealing industry went up, right? So we saw the need for all our players in the ECF and P2P market to find a niche and to come in.
Interesting.
And there are people into microfinancing. CapB is big into supply chain financing, and
Right.
and CapB has actually allowed businesses to grow very rapidly, especially the asset-light type of companies that mungkin susah sikit lah to get from the bank, but
Exactly.
they have spotted the growth. So in terms of MySIF has been kind of positioned to help also certain industries, for example, social enterprises.
Yep.
We give very good funding, 1-to-1.
Yep.
So you need to be accredited by KUSCOP, and then the government will give, it's a P2P financing,
Right.
and it will be at 0 rate.
Right.
That means the government is
yeah.
not getting anything back.
I think, Azrina, one of the things also I think that's embedded in what you're saying is as well as it provides a level of transparency, right?
Yes.
Especially for the social sort of enterprises. But hooking on to what you're saying about CapB, I'm going to pass the question to you. I think prior to this, a few weeks ago, we had a short discussion about, how this can be a form of, I would say, de-risking maybe, or balancing the interest rates and whatnot, and how schemes like these MySafe co-investment schemes, etc., can actually reduce the overall cost of P2P financing. Do you want to say anything about that, maybe?
I think the supply of, ultimately the cost of fund is determined via the supply and demand of the SMEs. I think there are two things that's determining whether the SME cost of fund is high. So putting aside that whether they themselves are really high risk or not, a lot of the SMEs themselves are considered higher risk. The other part of it is actually the perceived risk level of the SMEs.
Right.
So one of the things that what we have been trying to, in fact, what we have been doing over the past few years is that some of the SMEs, when they use the traditional loan, when you use a traditional credit scoring approach, is considered very bad. I think one of the examples is that we realized that over the past, when we look back our data, we have provided, out of the 3 billion, we have provided about 300 million to a group of SMEs that, according to the traditional bank scoring standards, or even the CTOS grading or credit bureau probability of defaults, are considered 20% above. So these are the group that outright, they will go to the banks and then they will be outright rejected. But we have since then provided 300 million to these group of customers so far, borrowers so far, and default rate is actually less than 1%. So that actually shows that there are different, and because the default rate is 1%,
is 1% only.
less than 1% for this group. despite the traditional scoring say it's 20%. So what we are saying is that for the smaller SMEs, what we need is a different approach to actually look at this group of SMEs. And when we are able to prove that actually in reality, they are not that high risk, you just need a different approach, then we can actually lower the interest rate to them.
Right.
So we cannot use the traditional.
You can't use the same lens the banks or the traditional financing.
Correct. Because I think the traditional way of thinking about alternative lending is that if SMEs have no access to capital, they are considered high risk, hence I got to charge them higher rates, and hence, and then we give them access to financing. That's one way. I think just there are different ways to actually eventually lower the risks of the SMEs. Then back to the point just now, that's on the demand side in terms of the fund.
Right.
In terms of the supply of the fund, I think MySIF is actually very helpful because at the beginning, where do we find the money to actually prove that this group of the SMEs actually are, before we even actually have the track record to prove it, somebody needs to be there to actually support the financing. So I think MySIF during that period has actually helped really build up the track record. And now we are bringing all this data. I think over the last year, last 2 years, institutional investors, asset management companies started to come in. And then when we present them this sort of track record, to them that's great because they are getting a return that is still higher than what they have normally to a group of, lending to a group of SMEs that they don't have to compete with anyone else in providing the financing.
Right.
So I think it became a win-win situation. The cost of fund eventually do come down with more and more innovative platforms around.
Thank you, Chin Siang. Let's just touch a little bit on regulatory considerations. Cash, how do you think we can make this fundraising process a bit smoother from a regulatory angle? And then any suggestions for the MSMEs and MTCs to how they can navigate this a bit more effectively? Because there's a perceived perception from the MSMEs that this is quite a burden.
I think looking back first, equity crowdfunding and peer-to-peer financing have succeeded in Malaysia, and I think Chin Siang and I sit here, we can't take all the credit, right? Rightfully, a lot of the credit goes, and I say this here not to get brownie points, goes to the Securities Commission, right? Because if you look at why and how it succeeded, it happened because the regulatory framework was, I would say, just right. If you look at all the, you'll be surprised that it hasn't taken off in many countries. I just use one simple example. In Malaysia, today, if you run an equity crowdfunding campaign, truly anyone can invest. From the retail investor to the largest corporate, from a Malaysian to any foreign investor, as long as they can get their money to Malaysia and the money is legit, they can invest. Right? That's truly democratizing fundraising. It hasn't been the same in other countries, and it hasn't taken off there. So the regulatory framework, I think SC has been very forward-thinking in its approach, kept it light, kept it suitable for the level of SMEs that raise funds, so some credit is there. Now, going forward, we have also grown. When equity crowdfunding first started, our limit was any company can only come and raise 3 million, the max. Then it became 5 million, and today it is 20 million. So we can now help a larger MSME address their funding needs. Right. So obviously the complexities have grown, right? So we will have to prepare to deal with bigger companies.
Right.
However, how can we make it smoother from the regulatory perspective? I think one thing we need to be careful to avoid is what I would say is as in adding on until it becomes too much, right? Right now, the cost of doing an equity crowdfunding campaign is very, very reasonable, right? So you can raise money at a much lower cost than, say, more traditional fundraising as going to a public listing or in any other way, right? So we can help to bring that down. Now, obviously, it is understood that, yes, there are needs for regulatory framework, but if we keep on adding, then we might end up with a baggage that becomes too heavy and ultimately stifle growth. Now, at the same time, I think all the platforms are aware, we have also upped our game. Our cost has actually increased, right? Because as we grow bigger, we have a lot of compliance. We want to ensure that we continue to bring good deals to companies. So our costs have gone up, but we need to keep it manageable. On the other side, when it comes to companies that are coming to us, what we see is that there is a need for a lot of support services. You'll be surprised that many companies who are doing well, who are growing in their business, have challenges understanding how to raise funds. Have challenges in when they come to us and we look at them and they are not prepared. Right? So I think that needs to be addressed. So I think one way would be to find ways to get more understanding of capital markets into the MSME space. That's important. And of course, a lot of support companies, advisors and all that play their role too. So that's one thing that can be done. Another is, to a certain extent, equity crowdfunding today, while all of us know and hear of it, it hasn't really reached everywhere in Malaysia. It hasn't reached everybody in Malaysia. So it's partly our fault, and we are doing our best to address it. But I think this is where also, together with the regulator, we can work out ways to how to bring it to the MSME in Sarawak, to an investor in Alostar, right? So who don't understand and are not aware what equity crowdfunding, what P2P financing, the benefits of doing that can do. And it's not that we are a bad asset class. We are a good, we are high risk, but at the same time, the companies also deliver results. Right? So we have seen exits, which Azrina mentioned just now. On our side, we have seen many secondary trades where investors have left, come out of the investment with very good returns. Right? We have handled a complete acquisition, there are dividends. So as long as the investors are aware of the risk and the limits are set by the Securities Commission, but at the same time, we also advise them to spread their risk. I think it's a good asset class, to look at along with all your other portfolio, and a lot more awareness need to be done on that.
Excellent, thank you. So if I may summarize, balanced regulation, capacity building, as well as awareness, right? Okay, thank you very much. Yeah, so Jess, we were talking, right? We had an hour to fill, and she was telling me it's about controlling how long they talk. So I'm quite cognizant of the time. So we've only got about 2 questions left. So I'm going to hit one to Lavini about the same sort of questions, but from an issuer or a company perspective. We've heard it from a platform perspective. What's the best way to raise funding, as well as to continue to comply and address the regulatory regimes? Yeah.
Okay. I think, to address your first question, what is the best way to
comply?
Successful best way to raise.
Raise,
right.
Yeah.
So we have the benefit of the community who was already buying from us, a large community. So, in that sense, we had to educate our mummy community who was already buying from us to say, okay, Baby Dash is going to be doing this next round of equity crowdfunding, and this is what it entails. So we actually sent out email newsletters, we had conversations with them, we did road shows as well, so they could come and ask questions. And that's really important to explain to them, because not everybody understands. And don't forget, the first time we did it, ECF was very new. We did it in 2017. SC gave the license in 2015. And I think the first few live cases were in 2016, right, Cash? So we were very much at the early days of doing our first round. So the education process for our community was crucial for them to understand. And let me tell you some of the questions that we got. People wanted to understand how is it that they're going to get their return, what was the exit plan, Some people thought that, oh, a typical question was, oh, what's your dividend policy? Because, people buy
Must be
stocks.
accountants lah, this one.
No, because some people buy stocks on the stock market and then, they rely on the dividends. So it was an education process to explain to them that you're investing in a young company that's growing, and everything that we do will be reinvested back into the company to then grow the company to the next level.
Right.
And that's a continuous process until we go towards our exit plan. So that was quite a journey in itself. So education, I would say, is the biggest thing. And that's how we managed to convince our community to come on board. Because they were buying from us anyway, they liked the product and they could see where we were going. We had our whole growth trajectory. So that's exactly how the support came in.
Interesting. So we've got 2 more questions, Scott. I think we have time for 2 more. Just going to go to Cash about maybe touch a bit about the emerging trends right now, at least from an investor perspective. What do you see is hot, and how can the MSMEs and the MTCs, the issuers, take advantage of these trends to actually improve their likelihood of getting financing? Yeah.
I think the trends that we see spread across are the same that you see across all industries. Today, investors are not just looking at how much can I potentially gain from my investment, but also what will my money do for the world, right? So that's very important also to investors. We're beginning to see investors looking at what's the impact of the company, the ESG, right? What kind of good am I doing with my money? Right? Sure, they still want to look at good investment deals, but for them, it must be together with something that does not damage or bring harm to the world, right? So I think companies that are planning to raise funds, they really need to look at the kind of impact that they're doing on the world, from the environmental or even from the governance perspective and how they interact with the community. So what we find that companies, and we did a few, for example, a company called Origo and Material in Works, these 2 companies recently raised funds and they were successful. And both of these companies have solutions that are addressing climate change.
I see.
And what we noticed is that they drew the investors who were very keen on that. I remember one investor calling me up and said, this company says that they have a solution for this paper, right? And how to avoid the cutting of trees. Is that true? I said, well, and we do a kind of a positive screening a little bit. We're just starting to do that. He said, yes, but speak to the founder. And he went and he looked at their plans and their factories, and he invested. So I think companies now today need to prepare for this new world where what impact they do, their solutions for the world is as important as the money that they make. Right? So we see that for sure. The other trend that we see, and I mentioned that at the start, is technology. So how can we make investing more not only accessible but manageable? Right? So I think things like our token crowdfunding, using of blockchain, fractionalization, all of this will also become important. So I think companies will also have, going forward, a lot more solution as to what they can do for their funding.
Great. I think thank you very much. So it's ESG as well as digitization is the emerging trends that we can take advantage of as MSMEs. Just one last one for Xinjiang. CapBay, I've been told CapBay has been promoting its Sharia compliant investments, and it's aligned to ESG, sort of like ethical, financial, socially responsible investments, etc. And you've done this to advance social solutions, right? Through investments in your platform. How has that been for you?
Yeah, great, actually. So we started venturing into Sharia compliant financings in 2020, where we took over Kenanga Capital Islamic, one of the Islamic trade finance arm of Kenanga Investment Bank. Since then, we actually has been shifting more and more focus into this. So last year, more than half of CapBay's financing are already Sharia compliant. I think we're seeing that is going to be the growing trends. There are a lot of the funds have already indicated that their funds are dedicated towards Sharia compliant financing. And I think both the issuer and the investors actually see the benefits on that. I think by adhering to the Sharia principles, I think that investors know that the financings are actually channeled to the projects that will do no harm. And then for them, that's one of the, it's aligned with their objective for the investors. And then for the issuers, actually what they really want, there's actually, the Sharia principle, financing principle, is actually more beneficial for the issuer. So that, I think, for example, compounded interest is actually not, is actually prohibited. I think late payment charges are a lot more controlled. So I think just generally most of the issuers, especially the savvy one and the ones that have been kind of, we have been telling them as well, educating them, they know that the preference is always go towards Sharia compliant financing. So we see that can be the growing trend as well.
Okay.
Yep.
Okay, great. I think, thank you very much. So if I may just quickly summarize, the recurring theme of the panel today seems to be about, while raising financing, it's raising the community as well, and then bringing that community of investment with you throughout the journey of expanding your business. And from a regulatory standpoint, it's important for us to keep a balance for both investor protection as well as not to make it restrictive. Then from an emerging trend standpoint, it seems ESG seems to be a recurring thing that investors are looking at right now, as well as technology, right? So I think, did I sum it about right, maybe? Okay, great. So I think we've got some time for questions. Do we have mics around? I think we can open up questions. We've got about, say, 8 minutes or so for questions. Anything you want to ask our esteemed panelists? Silakan, please.
I've got
You're
one
welcome.
mic, so I can run.
Okay. Wow, the session must be, we have one. Thank you.
Oh, good.
Salam everyone, good morning. My name is Audrey. You talk so much about financing. I just want to know how well is the companies doing monitoring? Okay. How well does the company do monitoring? Not just raising finance. I think that part is very important after what Malaysia has gone through. Thank you.
Anybody want to take that? Cash, maybe? Oh, okay.
Yeah, I think I'm assuming that you are saying, correct me if I'm wrong, what I'm assuming is that you are saying that once the financing has been given, fundraising is done, what are the things that the platform is doing to ensure, to kind of monitor whether the impact is real, whether impact is real. At the same time, actually, the investors' interests are protected after the money has gone out. I think, so I'll be answering from that two angles. And I think it is the same thing that not just CapBay do, I believe a lot of the platforms actually focus a lot in, because it is actually about the long-term sustainability, not just of the project, but actually of the platforms and our reputation to protect as well. In terms of the, I think, so for example, in terms of the money given out, most of the P2P platforms right now today actually focus on short-term financing as well. So short-term simply means that when I give out the money today, and especially if it's supply chain and trade related, once I help somebody, SMEs, complete a project, the SMEs will keep coming back. So for us, monitoring actually is just part and parcel of the credit scoring, monitoring and assessment for all the SMEs. So actually that's just, so I think that's the basic that every single platform is doing. In terms of monitoring the impact, actually that's one thing that all of us really love. I believe, in fact, it is something that all of us keep doing to motivate ourselves to keep doing this. So for example, every now and then I think just last week, I have one of the clients actually came back and said that, hey, you know what, historically, I have always just gotten one project from Petronas. And then that's the past 3 years. I've never managed to grow it beyond that. And then because of you guys, now I have 2, I have 3, and it wouldn't have happened without the alternative financing. We have I think Azrina and I, we were talking about this particular company that actually where we provided financing is a recruitment company, is a manpower supply company in the IT space, supplying Malaysian IT talents to also support some of the overseas project, MNC projects. Started with only 200-300 employments in Malaysia. Today they are they are supplying thousands of, they've created more than 700 extra jobs just for that particular company. And they are able to do that because with additional working capital, they are able to have more people on the payroll to support more of these kind of projects. So I think this is just an example of how companies like us are constantly monitoring the development post fundraising, not just for our own credit assessment. A lot of it is also to ensure that the team in CapB and the rest of the platforms are really able to see that the impact that we are creating, which is also very important for hiring nowadays. If the people don't see that they are creating impacts, they don't want to join, they can go to big banks.
I see. I'll just add very, very quickly. I think the question of monitoring that was mentioned, it starts from the beginning. I think if you look at the framework, SC has actually mandated, and it's a good time to explain what our role is. So SC has mandated that all the companies that come to us, and sometimes companies come to us and say, hey, what do you guys do? So we tell them, we do screening. We monitor, not monitor, but we screen the company for suitability before we put them on our platform. So we are mandated to do due diligence on the company. Right? And this has become more robust over the years. Like maybe what we did in 2016 when we're dealing with a small startup company is different now than what we do with a company that is as 7 years old, revenue of 10 to 15 million is different. So we do have a full due diligence team in place to do to review the company before we fund them. And not every company that comes to us succeeds in their fundraising, or you even see them. We have many companies that you do not see because we turn them away, because we say that you are not ready yet. You may need to look at this area or that area, but you're not ready. Because we look from the perspective of legal, we look from the perspective of business viability, we look from the perspective of governance and everything, right? So that's one whole area. So it starts from the beginning, even before they fundraise. Now, after they fundraise, SC again has a framework which says that the company must report regularly, including financial. And so what did we do? We actually set up a team. We have a post-fundraising team that talks to the companies and asks them to report. And when we get the report, we share. Right? So there may be laggards, small companies who are sometimes late in reporting, but we continue to chase them. So our role is we do not interfere in their business. Right? So it's not that Pishin, after they raise money on Pishin, so Pishin now says, I take a board seat, I will now monitor your business decisions, I will even run the business. No, we don't do that. Right. We connect investors to the company, and we try our best to bring good companies. And I think if you look at what we have done and all the platforms, we've done a very good job. Statistically, one very common saying is that 9 out of 10 early stage companies fail. You Google, you'll find that. 9 out of 10, 90% fail. What's our statistics? 175 companies raised. I think we have a few business failures, less than 3%. I think 3 or 4 companies over the years, 2 from the pandemic, have not been able to proceed. All the rest are still around. We have companies like, for example, Policy Street, La Pasa, right? All of these companies today are being touted to be the next unicorns. If you had invested in those companies, you'd be sitting on pretty good paper gains today. Right? So we have a lot of companies. And these are I just mentioned 2, but there are a lot. And one last final point, and we stress this a lot to everybody. Equity crowdfunding obviously is risky. So come in and understand the risk. Not only the risk, but understand the method. It's not like I'm going to invest today and I'll be able to sell tomorrow. No. Medium to long term. And secondly, our strong advice to everybody is spread your risk. Don't just take one company and say, I'm going to invest into only one ECF deal. Spread it. Yeah, we have 10 platforms and pitching in multiple deals, but there are also many other platforms around. Look around, spread your investment so that if one does not do well, the other will do well. That's our advice to everybody.
Sorry, can I just add from one of the companies on the NCF platform perspective? Full transparency is the most important thing. So for us, right from day one, we made it clear we're not going to give dividends. For us, it's like when we hit profitability, we're going to pump it back into the company to accelerate growth. Our aim is to give you 10x to 20x return in the next 7 years or whatnot, right? So for us, that was our goal and our vision. So the investors who came in, they knew that. And so yes, you will get because a lot of them are first-time investors. They will be asking, okay, when are you going to exit? Because for us, it's M&A and IPO. Right. And when we get that, that's when you're going to get your return. And you'll get people maybe after 3 years saying, okay, how's it going? When are we going to get returns and so on? It's about managing them because we never misled any of the investors. We were very clear from day one. And so when you talk to them and so on, then they understand and then they'll be okay and they'll wait. But then we'll have a situation where maybe an investor is desperate to cash out. They've had a death in the family, some circumstance has changed, especially the pandemic hit so many people. They want to sell their shares. Can they do that? And obviously we're not M&A or IPO yet, but as the founder, I will do everything it takes to get a buyer for your shares. And we would do that. And that's what we did with 1 or 2 of our investors. They needed it, we were there, and they made a return. They made double their investment, even though we weren't exiting yet. But we knew our company was on a good growth. So we knew how to make sure that they were taken care of. So I think it's down to the founder, but at the same time, it's full transparency and disclosure from day one, so expectations are always aligned.
Busy. Can I just add?
Boleh.
I think I'm glad my operators know their regulations. but having said that, I think I've mentioned to you about MySafe, and we've gotten 100 million allocation to spur more impact investments to happen. And that comes with reporting as well. They have to report to us how those companies that MySafe will help to support can drive impact. And it could be, through milestones, and these are something that we want to see, because we owe it to our government to say, this is where your money is going to, right? So over and above the regulations that we've set, the guidelines that we've set, we also owe it to the government to see how the MSMEs have grown and contributed back to the economy. So that's key. Yeah.
Okay, I think we can accommodate one more question.
This is Abdurrahman Safi. I'm from Afghanistan. So my research area is on Islamic finance for sustainable development goals. And there is, as Lavina has shifted from banking, so I'm also the same. So I'm going to shift from banking to the capital market side. And the question is, as Cash has mentioned about the importance of regulations and laws of capital market is important. What for those countries that they don't have capital market and they are interested to these MSMEs? Can they get the rules and regulation from other countries? This is one question. And the second one for the Raja Jasrina. What's the 3 first steps for those entrepreneurs that they want to start? They are willing to start, but they don't have the first step to take. So thank you for your time.
Jasrina, you want to, or maybe Cash?
Yeah. Right now in Malaysia, the regulations for us is that we only deal with Malaysian incorporated companies, right? So that's one, right? So we only can deal with that. However, just as a guide, there are many active investors and venture capital companies all over Asia. Asia is really a booming place when it comes to investments. So maybe the company may need to come out a little bit and look at all the other venture capital companies to see whether they can access funds. The other option, obviously, in areas where the capital market is not developed, is to also incorporate somewhere else. So a company in Malaysia, we can deal with only an incorporated company in Malaysia. But it doesn't matter if the business happens to be in Thailand or in Kabul. It doesn't matter. The business can be anywhere. It's where the company is incorporated. So maybe look at the structures of the company.
Maybe I can add, while we say it has to be locally incorporated, but we don't restrict foreign ownership. It can be 100% owned by a foreigner, but all it needs to do is it has to be locally incorporated and registered with our Companies Commission. That's it. So you can set up here.
Sorry, could I, do you mean to get started to start their own business or get started with fundraising? With fundraising, okay, just wanted to clarify. Okay, so I think for me the first 3 steps, one is of course to make sure that you have all your numbers. Because, you know, in a lot of entrepreneurs, maybe they're not, especially as a founder, a CEO, you are depending on your background. Because for me, I didn't come from a finance background. I came from a creative marketing background. And typically, it is a very new territory of fundraising and not getting to know your numbers as well as you should, bottom line and all of it. And for me, thankfully, I actually went through some courses. I actually was part of the Magic Stanford program and a few other courses that gave me a crash course into fundraising and knowing everything about my numbers inside out. So when I go into a meeting and pitch to investors, there's nothing they can throw at me that I can't answer. And I don't need my CFO there, I don't need my finance manager there, I can handle it. I can have an elevator lift pitch and I can answer anything they throw at me. And I think that is so essential. You never know when you're gonna meet your next investor. Right. And you can't need your books and your documents and everything needs to be at the top of your head, top of your mind. So that is number 1. Number 2 is don't feel scared to tap into your network. I think a lot of us, when it comes to raising funds, we feel a bit reserved about reaching out to people that we know about asking for funding. When you don't realize that they are looking for their opportunity because you have an opportunity to give them. You think about it, why are you building the business in the first place? You're creating an impact in the world, in people's lives. You're looking at growth, you're looking at scalability, you're looking at your company growing a certain level, and you can give them an opportunity to make a return on their investment instead of it just sitting in FD or whatnot, right? And if you don't say something to them and you're not open to share it with them, they also lose out. It's not about you needing their money, they need your investment. Turn it the other way around and show the opportunity to them. And I found that, honestly, for me, I was the other way around at first. I was also a bit, I don't know, like to go shout out to like my whole network, my friends, my family who I don't mix with business, to tell them that I'm raising money. I felt a bit, I guess, not so comfortable about that. But I got out of my shell and I said, you know what? I believe in my business. I believe this is a good opportunity. Just do it. And I was so happy I did it. Within 3 months, we were able to raise 2 million ringgit. A bulk of it came from people that I knew in my network who I would never thought would have wanted to invest in the business. You have to get over that mindset and know that you're giving them opportunity. That's a reason why you created your business in the first place. Right? And number 3 is surround yourself with the right mentors and advisors. The operator is key. The operator you work with, like for example, Pitchin with Lavinia, Atta Plus for me, they are like your partners in making sure that it's a successful campaign. They will be your mentors and your advisors, but over and above that, surround yourself with others that you meet at networking events like these ones who have done it successfully before. Maybe they're venture capitalists, maybe they're serial entrepreneurs. They have all the learnings in the world to share with you. They also have the network of investors to open up to you. So I feel those are the 3 main points.
Okay, I think we can accommodate one last one from that gentleman.
Okay, hang on a minute.
Everybody's not hungry, it's lunchtime.
Yeah, good morning.
Morning.
Yeah, good afternoon. I just want to direct the question to Mr. Kashminder and Zian. From your awareness and data, what is the industry that you feel the next thing in terms of business and innovations as a business? Thank you.
Sorry, I have to charge you for that. Yeah. No, but I think I can't. But I think if you look at the trends outside there, every business is being changed by technology. Right? So I think every industry will progress. The companies to look out for are those that are using technology in their business to move forward. Right? I think that's one very key thing. We do have all the, for me, they are all buzzwords. You know, we had big data at one time. Now you have AI, and then you have fintech, and this and that. So these are all buzzwords. Look at the company, look at the founders, look at how they are growing their business. That is the best way. Agriculture is big today, right? But look at the companies that are putting technology into agriculture, even, you know, those kind of things. It's very hard to.
Yeah, it is a tough question.
Yeah, I don't have the truth, but I have the truth that has been working like that based on my own data only, which is that I think two types of businesses generally are growing fast on platforms like ours. I think the first type, I think there's a good and bad one. The bad one is usually the ones that tend to suffer a bit more than during the industry downturn. Then the banks start pulling back, and then they have nowhere to go. Then they come to alternative lending platforms. Then some, depending on the credit appetite, we will be able to do more or less, but there will be a lot of demands from there. The other group that we tend to see a lot of growth is actually the new business. So like what Cash mentioned, I think technology businesses or any businesses that I think tend to be at the forefront of the industries, these are the guys that they wouldn't get a lot of bank support. If you're today have, I think until today it's still the same 5 years ago. Today, if you develop a business with complicated business model, you go to the bank and try to get financing, typically you just won't get it. But it happened to be that these are the businesses that I think the industry needs them to become big and to grow. So end up, these are the guys that will come to Pitch In, come to Cat Bay, because then we are able to say that let's use a different lens to look at all these guys and we finance them. So yeah, so from our data, I'm not sure about yours, but I am guessing that those will tend to be the ones that are growing also faster than everyone else, just on our platform. Yeah.
Okay, I think we are time right now. Thank you everyone for staying and listening, and I hope this has been a fruitful session and an insightful one. And thank you as well as for the panelists for your really deep insights. So thank you very much. Let's have lunch.
Lizzie and the panel team, can I just get you to take a photograph? Come right forward. We talked about a really good panel session that's just concluded. In the afternoon, we have the Advancing ESG Adoption Amongst Malaysian SMEs. This is a workshop. They're going to talk about sustainability and ESG business, overview of simplified ESG disclosure guide, review and adoption. There are two presentations by Dr. Tatiana from the World Bank and Kausalya Gopal from SME Corp. There are workshop facilitators, Margie Ong and Tobias Mangelman. So please come back, and that starts at 1 o'clock, 1 till 4:30 with a tea break in, I think. So come back, don't go away. I think you're in really good hands to find out more. Thanks, everyone. Enjoy makan. Yes, 1 p.m. 1 p.m. because you're breaking off for lunch now. Thank you, everyone. Rahel signing off. Ladies and gentlemen, there's lunch on the house at the atrium, which is just one floor down. Take the escalators. Lunch is a decent spread of grub, so please join us for lunch. Thank you.
Hello, everyone. Kind reminder to go and grab some food and drinks over downstairs at the lunch by the atrium. So take your friends, your networks, your connections, and bring them downstairs for some food and connect over some drinks downstairs for lunch. We still welcome everyone. Kindly do. It's at the atrium. Take the escalator downstairs or the lift, and there's food. Get them while it's hot. Right here at the SC. Thank you.
Test. Hi everyone. Could I get everyone to go downstairs for lunch? I need a little bit of time to turn the room around for the next session. So it would be great if we could have lesser people in the room for the team to move things around.